the shipping and tanking industry. All right, this is very fascinating. When I started to look into this, I kind of got obsessed because the crude oil industry is so important. Oil, even after all this time and fear that people like to put in people's eyes with the electric vehicles, green movement, ESG, people really forget to realize that oil is still a big part of a lot what we do. Heating, transportation, any type of energy, power generation, anything, it's still important. So it's not going anywhere. And so a crude oil tanker is an oil tanker built specifically for transporting crude oil as opposed to refined oil. Crude oil tankers are built in a limited number of sites around the world, primarily in Asia, such as China, Japan, and South Korea. Some well-known publicly listed crude tanker companies include Frontline Limited, FRO, which, even though we're not talking about them today, I actually kind of like the CEO. I actually kind of like their fundamentals and stuff. Not better than what we're going over today, but Frontline would be another crude oil tanker that I would look into. TK Tankers Limited, TNK. Sacco's Energy Navigation, TNP. Nordic American Tankers, NAT, which we're going to be talking about today, started a position. Then we have DHT Holdings, DHT, and then Euronav, EURN. Again, this is a capital intensive business. And so let's look at some of the tankers in this industry. So there's a couple sizes. They have the coastal tanker, the smaller version, the Aframax. This is the smallest that most will talk about online and stuff. And most oil tanker companies within this realm, they'll have Aframaxes as the smallest. Suezmax, that's literally the workhorse for the whole industry. For the most part, most companies have more Suezmaxes than anything else. Some companies like NAT, Nordic American Tanker, they only have Suezmaxes. It can do long range travel, and it's small enough to get through the Suez Canal. So it's very versatile. Then you have the VLCCs, the very large crude oil tankers. Now these carry a bunch of oil. Now these are usually for really open waters, open ocean transportation. So we're talking about Japan to California, just huge travel. They're not really trying to go through any canals or anything. And so those are the heavy hitters. And then we have the ULCCs, the ultra large crude oil tankers. Again, open ocean, open seas. And within this industry, it's at a crux right now. It's at a pivotal moment. Oil's going through it, but also you have demand issues for crude oil tankers in the next couple years. So now that puts the industry and companies in a kind of a positive situation where if you have a workable fleet that you don't have to renew anytime soon, you just have to reap the rewards of the higher oil transportation costs and whatnot. And so there's an excerpt I saw from an article. In terms of new build crude tanker prices, the standard VLCC is now estimated at 160 million, a Suezmax at 78 million, and an Aframax at 60.5 million. This compares to 92 million, 63 million, and 51 million respectively in January 2021, showing the considerable increase in prices over the last 16 months. So you see the crude oil tanker prices to get them built have only skyrocketed. And if you do research in the industry, it takes 2 to 3 years to build these things. So that's a lot of capital invested on something that you can't get for quite some time. You might be missing out on a lot of the revenues that's happening within the oil tanker industry right now. So that's where it's at. And in April 2024, the International Energy Agency, the IEA, predicted that global oil demand would grow by 1.2 million barrels per day in 2024 and 1.1 million barrels per day in 2025. However, in May 2024, the IEA lowered its forecast to 1.1 million barrels per day, citing weak demand in developed countries, poor industrial activity, and a mild winter. The IEA also noted that this level of growth is still in line with pre-COVID trends, even with increased clean energy technologies and muted economic growth expectations. So even with that downgrade of just a little bit, the IEA still sees like, look, before COVID even happened, if we take COVID off the table real quick, oil consumption, consumption has still been in line of what it's been doing, and so it really hasn't been hindered. The show is just going on, and the people that are smart enough and are willing to invest in that the ideology that's playing out is going to be very profitable. And so, from this article, Sea Trade Maritime, 5-year-old Suezmax tankers worth more than new builds. So, this article came out in May 29, 2024. The Baltics analysts estimate a new build cost for Suezmax is 77.3 million, right? And compared to the 5-year-old vessel worth 82.8 million. Meaning, in most cases, especially like for cars, as soon as you take a car off the lot, it loses its value. It depreciates. But we're in an interesting predicament with the tanking industry because everybody in the industry knows there's profits to be had now. Like the rates, the TCE rates right now, the time charter equivalent rates for transportation of oil, they're going to be staying up at elevated levels. There's money to be made. The demand's not going down. COVID only put like a little bit of a bump in that. And so that's why 5-year-old 2X are more expensive, because if you buy one now, you can make profit now. And you might be able to offset that investment later. And so that's where the industry is at right now. And shippers are turning to longer term leases as tanker supplies tighten. So as the tanker supplies tighten, people are, might just want a little bit more of that security. So they might be getting into longer contracts with like bigger firms like Chevron, ExxonMobil, BP, where they just have a flat rate, a flat TCE rate where, is good on both sides, but they don't have to worry about any fluctuations in the next couple years, because this is a very interesting time right now in the markets in regards to crude oil. And there is an interesting there's an interesting thing I kind of figured out about the shipping industry. Now, what I didn't realize, and then we'll be talking about this on the next slide as well. Norway is known for oil and is Europe's second largest producer of oil and gas after Russia. The petroleum sector is a key driver of Norway's economy, accounting for 24% of its GDP, 19% of its investments, 36% of state revenues, and 52% of exports. In 2022, Norway had the largest oil revenues in Western Europe, with 7.7 billion barrels of crude oil. Now, we'll get into on the next slide, but Norway is a key powerhouse. They had an oil boom, what I looked up, and I believe in the 70s, where they just found a whole lot of oil, and that elevated that Scandinavian country like no other. They had a huge oil industry, and they produced a lot of crude oil tanking corporate talent in the way of CEOs and stuff. And you'll notice a lot of CEOs of these crude oil tanking companies, they're Norwegian. All right. And that's not by accident. It's Norway is an undercover oil powerhouse. It's only a couple notches down below the U.S. and Saudi Arabia and Russia. Last time I checked, it's definitely the top 10, and I believe it's in the top 5. So that's where the shipping, tanking, oil industry is currently.